Testing, testing. I think we are here. Yeah, take like 1 week's holiday. Did, did you come on Thursday to the school? Thursday, yeah. No, yesterday? No, only today. Okay, me too. I don't go to work. Okay, after a long driving, feel very tired. I realize now I'm getting older and older. Okay. Okay, so we start from here. Yeah, we talk about special rule with respect to the provisions, which normal company does not allow to do that. Banks, microfinance, and saving institution allowed to deduct provisions, but only only three class. National Bank of Cambodia allowed the banks, microfinance, and saving institution to do a 5 different provision, but tax department only allowed to do to deduct 3, not all of it. So that's the difference between NBC rule and tax rule. And we discuss about prepaid expense. Yeah, this is follow accounting. We can recognize as an expense when it is actually incurred. We have a special rule with respect to the preliminary and formation expenses, where all of the expense incur under tax law, they ask you to classify as preliminary expense and from preliminary and formation expense for formation and developments, what we call feasibility study, personal training, expense pertaining to M&A, merger and acquisitions of a companies, expend on bonds, floatings, yeah, making contracts to borrow monies, expense on purchase of immovable properties include only transfer tax, fees, commission, formal document. Yeah, as you can see, that's a 2 different here. I just got a question all from the real business on, oh, should be a slideshow, right? Yeah. Yeah, I got a question on Friday Friday before the holiday. Yeah, they asked me how do they record a bank and a real estate companies. So that's a 2 different treatment under the tax law. If you are a real estate developments or real estate companies, you buy and sell properties, all of this expense should conclude as cost of sale rather than the preliminary and formation expense. If you are a bank, yeah, and non-real estate company, you shall include all of this expense as preliminary and formation expense. Okay, so that different treatment. So because that person in charge both banks and also real estate business, so he confused. He's a finance manager from Hong Kong. So why? Why different? Because it's pay the same nature, right? On the purchase of property, but you are in different companies. I mean, different transaction. That's how the treatment from the tax law is different. Okay, so if it is a preliminary expense, you are allowed to choose one of the 2 options to deduct again tax on profit. First option is that you can deduct 100% when it's actually incurred, or you amortize for 2 years. Okay, 50% at the times actually incur and another 50% next year. So I already mentioned that it depends on how big the expense is, and it depends on a company's positions, which means if you anticipate a fast profit, then 100% deductible is advisable. But if you anticipate that your company will generate profit, I mean the profit is slow, you cannot make profits in the next 3 or 4 years, amortization for 2-year option is the best. So not fixed for once, we have to have a conditions. Why I say this, if you profit is slow, then 2 years is the best option, because the loss carry forward, as you already learned, right? We can carry forward only for 5 years. So the delay in loss making at the early year is the best options. Yeah. Okay, now we talk about what we call tax depreciation rule. Yeah, accountings. Do we have a really specific rule that force you to follow, or no? I mean, under accounting, do they have a rule? I don't think so. Yeah, which means, if you are in this purchase this asset, you have to depreciate this and that. No, right? They allow you to do. They teach you the principle of how to do depreciate. Yeah, how to classify as an asset, right? And then do depreciate. There's a formula, for you, straight line, decline, whatever. So, but from tax law, you don't have an options. You must follow. Okay. For the purpose of TOI to be deductible, the depreciation must meet 5 conditions as follow. Okay, 5 conditions. Must be made only for fixed asset record in balance sheet. Okay, if you record the asset in balance sheet, you can claim depreciation. But in practice, this is not always. This condition is not always, because we have some foreign investor come to invest in Cambodia. I used to discuss a couple times that remember we're talking about special depreciation. Remember, that's a company from US. They have a different depreciation rule, and they have a different condition to record, a purchase as asset. They mainly based on amounts, based on the purchase amounts. So if your company is so big, if any purchase of tangible or what we call assets below $10,000, you cannot record as a fixed asset in your balance sheet. You must record as an operating expense. And we have this company in Cambodia. Yeah. So based on accounting report, we don't see this asset in balance sheet in the year that they actually purchase, right? The asset that we purchased, 5,000, 6,000, 8,000, 9,000. Yeah, we don't see in the balance sheet. We see in the income statement in the year that they purchased. So what we're supposed to do with the tax, because the tax law say here, we can claim depreciation only assets record in balance sheet. Based on the practical point of view, you have 2 options whether you want to do. First, you just claim depreciate, even though it's not recorded, but you keep a separate listing, as free asset listings separately, include all of that asset in that list, and then include in the depreciation schedule, tax depreciation schedule. But there is no accounting depreciation, right? Because you already write it off to the profit and loss accounts. Or you submit a ruling to the tax department asking them, say, hey, I purchased all of these assets, but based on my parent company accounting rule, they do not allow me to record as an asset. So can I claim 100% as deductible expense? You can do that. So then it depends on the tax department will decide will decide whether they allow or not allow. But based on my experience, if the amounts actually more than $100 or maybe $500, they will not allow. Yeah. But if the amount something less than $500 or $100, some asset, which we can do for more than a year, then they will allow to claim a full expense in the year that we purchase. So yeah, but most of my client that I see, I just say, put in the fee asset listings, put and claim depreciation. So based on that practical point of view, it's work. The tax department accept that. So this rule is flexible. It's flexible. But this is the rule where we should change. But as a principle, they want to keep it like this. But in practice, it can be flexible. Okay. So why why flexible? Because we have an investor from overseas. They have a different rule, so that we need to actually adapt or follow them as well sometimes. Okay. Second rule is that it must be made only on fixed assets subject to depreciations. Yeah, as accounting rule, right? Some asset we purchase cannot be depreciated. What kind of asset that cannot be depreciated? Land, yeah, because when we use it, sometimes we increase value. Okay, at the other asset, when we use it, the value will be decreased, and then we can depreciate. It must be made on the basis with and within the scope of a cost price. So we only follow cost price. Yeah, the price that you actually pay for. Because some company we follow IFRS. Then you have to do revaluation some asset, right? Such as investment asset, for example, and maybe immovable properties, for example. Yeah, you require to do a revaluations. Yeah, it doesn't matter. When you do revaluation, the cost of that asset or the value of that asset increase more than the cost price. From tax point of view, it doesn't matter. So only use cost price. And the fourth condition is must be calculated within the straight line method of depreciation for class ones. Yeah, they have two methods for you to depreciate straight lines for class one assets. We will discuss what is a class one assets is. Or declining balance method for class 2, 3, and 4. So tax law, classifies asset into 4 different classes: class 1, class 2, class 3, and class 4. So class 1, straight line; class 2, 3, and 4, we use decline balance method. You all know, right? I don't need to explain what is the depreciation straight line is and declining is. Okay. And it must be made actually by the enterprise. So it must be made actually by the enterprise, which means you cannot bring an asset of somebody else to claim depreciation under your company's accounts. Yeah. The asset must be yours. If not your asset, you cannot claim depreciation. That is the 5 condition. All company must be fulfilled. Okay. Well, that's they want to explain. They said, what is the asset according balance sheet, which means enterprise must do depreciation on fixed asset according balance sheet. For mixed use fixed asset, serve business and serve non-business, the enterprise shall be considered having sold at market value and providing fringe benefit or having made as a non-deductible expense for use of asset for non-business purpose. Yeah, this has been discussed before, right? Income from, in the section income from fixed from immovable properties. Provide free of use to your employee or third parties. if you provide free of use to employee and third parties, if to employee, it's become a fringe benefit. If a third party become non-deductible expense, I believe you still remember that, right? And from the company point of view, free, cannot be free. You must be recorded as a income based on the market's value. Okay. And from tax perspective, depreciation expense, you must pay fringe benefit or claim as a non-deductible expense. If to employee, fringe benefit. If to third parties, which is not, or any person is not employee, then the depreciation expense is a non-deductible. If the enterprise has complied with the above rule, the mixed use of fixed asset does not have any effects on depreciation taking. But for when we provide to employee, we pay fringe benefit. We can claim deducts because fringe benefit itself is a deductible expense. But if to the third party, because we don't pay fringe benefit, right? There's no fringe benefit tax supposed to pay. Then we edit back the depreciation expense for when you provide to a third parties. Okay, some rule that you need to remember. And then enterprise must open each account for intangible assets and class 1 asset to record all amounts related to purchase of asset, price, rebates, permanent improvement. They just want you to record whether if it is intangible asset or asset class 1, you must include amounts that related to first the purchase price, rebate, which means if the supplier provide us a discounts, or maybe you do a permanent improvements on the asset, you have to include as part of as the purchase price. And for tangible asset class 2, 3, 4, recorded in the pool accounts, enterprise must open each class to record undepreciated balance. They explain you how to record undepreciated balance available for depreciation, all amounts related to the additional acquisition. This is explain how you present your depreciations to the tax department, because under the TOI returns, they have a depreciation schedule. And then they have intangible, tangible class 1s, and then tangible class 2, 3, 4. Okay, so then you have to group the asset. If class 1, okay, you put in that's columns, and then you should record class 2, 3, and 4 in the separate column, separate row. Then okay, I think Rasmay will show you on how to record this. We have tax simulations, right? Let me double check. We'll also include the TOI. I want them to include the TOI as well. Okay. Yeah, because then it can show you on how to record in the TOI returns. But of course, you record what we call cost. First is cost, and then undepreciated value, or in other words, you can say book value there. Yeah. And then additional acquisition, and then addition. And or dispose of asset. Dispose. So this is what we call the depreciation value, because depreciation value for intangible asset, what you need to include is purchase price, minus rebate plus permanent improvements. But for class 2 and 2, 3, and 4, you depreciation value his depreciation value include what we call purchase price or cost price, and then we plus or minus, okay, we minus rebate, plus permanent improvement, PI. But for the class 2, 3, and 4, we classify into what we call, maybe you can say, you can write this class 2, 3, and 4. So you include cost price. Let's say cost price is 100. And then let's say NBV is now 50s. And you purchase, you have a new purchase of 30s. And then you dispose. Asset dispose. For tax, based on tax law, asset class 2, 3, and 4, the disposed value you have to include here is the proceed from sale, not gain or loss per accounting. It's proceed. So, and then let's say you can sell some of the asset in that year 10. And then when you calculate the depreciation value, you take NBV plus additions, and then minus dispose or proceed, then you can have depreciation value. So 50 plus 30, 80, 80 minus 10 is $70. So this is $70 is depreciation value. And if class 2, we do the same, we complete because we follow the same formulas. For for intangible and asset class 1s, depreciation value equal to this. So cost price, maybe you purchase is 100. If you get a discount of 10, you minus 10. And then if you have an improvement, another 5, this is your depreciation value will be 95. So 95 is depreciation value. And the TOI return, you need to do this. You need to complete and prepare this, but they do have a, a schedule for you. Yeah. Or maybe spreadsheet. Cool. Not all, it's a spreadsheet like that. Okay. Yeah, to calculate like that. So for asset class 2 and 3, the cost price is not relevant with the depreciation value. Only NBVs, additions, and dispose. That the 3 main numbers that you need to remember. So cost price is not relevant, but for the class intangible asset and asset class 1, cost price is the main. Yeah, the minus rebate, the plus improvement if there is any improvement incur. How about accounting? Mostly we follow straight line, right? Mostly. Yeah, we estimate the useful life of the asset. And then if we depreciate based on the useful life of the assets, it's a straight line method. Some asset we estimate 5 years, 10 years, 15 years. Yeah. From tax, okay, we have 2 methods, straight line plus decline balance method. decline balance method, we don't care about the cost price. We only care about net book value of the asset. Okay. But how about asset which maybe when we start a new business, how are we going to complete when we start a new business and we buy a new asset in that years? If we start a new business, of course, cost price, let's say we buy asset 100. So first year we don't have NBV, right? Yeah. The NBV gonna be the same as the cost price because there's no depreciation, before that. So cost price 100, NBV gonna be 100. Addition we don't have. Dispose we can have sometime, we can dispose after we purchase. Then maybe it's not good. Then we sell it off. Yeah, but there's no addition. Okay. If first year, then the cost price and the NBV the same. Okay, don't worry, we will do a lot of the side. Depreciation schedule calculation is a must when we answer the TOI questions. Yeah, this is based on accounting rule. Depreciation must be made only on fixed assets subject to depreciations. It must meet two criteria: purpose. All types of assets the enterprise bought or produced is for durable use, not for sale or transformations. What does it mean? Yeah, when they purchase or they produce, is for use, not for resale or maybe transform into a different products. Yeah, if you purchase that asset and for purpose of resale, it's not a fixed asset, right? It's inventory. And or if you purchase for support your productions to transfer or transform into a different products, that is a stock. Yeah, stock or raw material, right? It's not a fixed asset. Okay, we only take into account duration. Duration considered as durable, it is more than 1 year. It is more than 1 year. Same as accounting that we have now. If anything that we can use for more than 1 year, we must record as a fixed asset. So this tax rule follow the same. Okay. They said tangible assets only for properties used in the business, which is likely to lose value because of use or obsolescence. Land is not depreciate properties. Obsolescence. Okay, so land is not depreciate properties. Yeah, the land value can be up and down, right? Now the land value is down, but maybe in the next 4 or 5 years, the land value will be increased. Intangible properties, preliminary information expense, research and development costs, patents, trademarks, license, item protected by law, purchase goodwill. Yeah, we can also claim depreciate the purchase goodwill. Others. And any kinds of tangible asset can be depreciated. Financial fixed asset security share is not depreciated. It's not depreciable. So all financial asset cannot be depreciable. Security, shares, maybe bonds, other investments, assets. But from accounting, you are required to do a valuation or impairments. Yeah. Okay. So what will happen if your financial assets value decrease? Decrease. Yes, from accounting, you will record this as the expense, but from tax perspective, it's not deductible. You have to add it back. In any reason, tax law will not accept, the reduced value of the financial asset. Okay, even though until it actually lost, maybe you invest in a company, invest subsidy, and the subsidy bankrupt, you now completely lost. Okay, then you can write off an expense at the time, but you cannot do a depreciation or maybe impairments, over the years. But based on accounting, if you see the subsidiary balance sheet, see, oh yeah, loss, then you will do an impairment every year. Yeah. Okay. So for tax is not allowed. Depreciation must be made on the basis and within the scope of the cost price. Okay, they just try to explain here. The cost price is this original value of the fixed asset recorded in the accounting books. Asset must be recorded in accounting books at the date of its inclusion in the enterprise asset and its cost price, which is acquisition cost. First, the cost price include acquisition cost, purchase price minus rebate plus subsidy expense, such as custom duty, transport. What you can include in the cost of the asset. Purchase price minus rebate. Rebate is mean the discount that you can get from suppliers. Subsidy expense include only custom duty and transportation. Yeah, like based on my example before, if a bank purchase a fixed asset, purchase buildings and land, so the banks will require to pay commission fee maybe, and stamp duty or transfer tax plus maybe other fee, processing fee that you pay to a lawyers as well to do a sale purchase agreement. All of those you cannot include as part of your fixed assets cost. You must record it as a preliminary expense, can be deducted 100% first year or maybe amortized for over 2 years. But if any expense related to custom duty and transportation, you can include as part of the cost of fixed asset. But they said financial expense is not included in the purchase price, which means if you borrow money from the bank to buy that asset, the interest expense you pay, you cannot include. Or maybe, but sometimes you don't include interest expense, but there's maybe some other fee happen at the time you get the money, you get the loans, right? Maybe you pay for some lawyers, yeah, a lawyer to have you to prepare document for loans, or maybe you pay for some other bank charges at the times you actually apply for the loans. So all of those fees related to the financial transaction are not allowed to include. Before they allowed to include, but now they make it clear from 2020s you cannot include. Yeah. The production cost, if the asset produced by yourself, by the company itself, determined as a cost accounting based on cost accounting method. If the asset the company produced by itself, then how to determine the cost price? You use cost accounting method. General cost plus storage cost and financial cost is not included in the production cost. So what you cannot include is general cost. This is probably indirect cost, right? Yeah, indirect cost you cannot include, storage cost you cannot include, and financial cost is not included. Okay. And the accounting cost accounting, can you include storage? Storage of your maybe raw material or any storage. For storage, yeah. So from tax law, they do not allow storage to be included as part of the production cost. But I see some company in, like some company they do that. Some company they do that. They include everything. Yeah. And not just only in Cambodia, but some other country also, some, yeah, do have accounting rule, okay, but sometimes it's flexible based on management of the companies. They said based on the uniqueness of their, business transactions, they want to include, and the board approve the policies, and then they include. I have a manufacturing company here in Cambodia. I met with the tax officer. They asking me why your cost of sale so high? Your production cost is so high. I mean, the company making a net profit around some, 4 or 5% net profit, but the production cost is actually almost 10%, almost 90% of the total sale. So which means the net cross profit margin around 10s, and then the operating expense, what we call indirect expense, 3 or 4% only. So and some will show, okay, the production cost, if you are production, maybe the production cost around 50 to 60% of the of the total sale. Okay, so that's a difference. But from tax, you cannot include. If they see that you include financial costs and storage or maybe indirect expense, they can take it out. Yeah, from because it will lead to a overstates the fixed asset value. They said the value of property contribution if the asset is received by state or investors at the value of the contribution as specified in the contribution agreements. A fair market value if the enterprise obtain asset for free. Yeah, sometimes your shareholder contribute asset as a capital. You can inject capital in cash or in kind. Sometimes investor inject in kind. In kind, they inject in asset, land, prop building, or maybe any kinds of tangible or intangible assets into the companies. So then based on the contribution agreement, they will say, hey, my property gonna be $1 million. Yeah, that's I inject to your companies. That's based on that. Or some asset you get free from maybe the governments or maybe other parties. Then you need to do a valuations to get what we call fair market value. So you need to hire a real estate, if you real estate, or if not real estate, then production equipment, all of those, they have a special list to do that. Yeah, they have a specialist to do that. To value the fair market value or what we call the market values. Okay, you use that report as a basis. VAT, which is, yeah, they're talking about VAT. VAT, which is incurred in the purpose of in the purchase or production of the asset and which cannot be reclaimed is the element of the cost price. Okay, if the VAT, sometimes you purchase and then you cannot claim. For example, if you purchase a vehicle for transportation of people, less 10 seats and below, you cannot claim VAT. So that VAT you can include as a cost price. Is that the original value cannot be changed. From tax law, you cannot be changed. The exception is only that's revaluation authorized by competent authorities. But I only talk about revaluation. Revaluation is mean the price of the property is higher than the original price, right? Okay. But they say that only authorized by the competent authorities, who is the one who actually recognize. I would believe that maybe the tax departments. Yeah. Yeah. Because we have, not tax department, based on the tax department, based on my observations and, verbally asked to some, they also don't know. But I believe that if they don't accept it, you cannot change it. But actually, the authority that can authorize this kind of revaluation is what they call state General Department of State Properties. Yeah, but as I used to tell you, the office is near ACE, Sumdai Pan, General Department of State Properties. In any country, they have that because that department control all the state property, So they are under the Ministry of Economy and Finance. In Malaysia, they have this kind of department too, and they do revaluation of their state property every 5 years. Why? Because the country also need to prepare balance sheets, but they don't do every year. They do every 3 to 5 years. The minimum 3 years. I met them a few months ago, and they came to Cambodia to do a valuation of the Malaysian embassy here. They see how the Malaysian embassy, what they have, buildings, land, all property that they actually own, and then they come up with the valuation. So, but they do this 3 years or 5 years. Okay. Why 3 or 5? I asked them. They say that it depends on the economic conditions. If they see that the property price or the asset value is, like change a lot in the last 3 years, they will do 3 years. If stable, especially immovable property is stable, then they will do 5 years. I don't know Cambodians do the same. I believe that they do the same. Okay. Depreciation must be calculated within straight lines method. Okay, or maybe for class 1 and declining balance method for class 2, 3, and 4. So depreciation of intangible assets, patent, copyright, drawing, model, franchise. The depreciation rate shall be calculated on life of the properties, using straight line. So for intangible, all kind of intangible, if you can estimate the useful life, you depreciate over the useful life. If 5 years, 5 years, 2 years, 2 years, 3 years, 3 years, tens, based on straight. Or if you cannot determine the useful life, then you go 10% straight line, which means intangible asset can be depreciated for 10 years. So as you can see, based on these formulas, you don't see residual value. Accounting, you have to estimate, right? Even though you estimate 5 years useful life, but you have to, if I use it for 5 years, you expect that you can dispose that asset, in year 5, maybe you can generate some monies. For tax, no need. Okay. Yeah, you don't need to try to estimate the residual value. Okay, so for intangible, you have 2 formulas. First is straight line based on useful life. If you cannot determine, 10% straight line, which means you depreciate for over 10 years. Okay. For depreciation of a tangible asset, as I said, we classify into 4 different classes: class 1, 2, 3, and 4. So now you can see class 1s, you can include building and its structures. You can road, also class 1, ship, also class 1. You depreciate 5% straight line. But building, we divide it into concrete and non-concrete. Mhm. Say comment. Building we divide into one is concrete, um, and non-concrete. Okay. If concrete, you follow 5%. If non-concrete, 10%. So concrete, 5%. 5% straight lines. If non-concrete, 10% straight lines. Um, because now a lot of building, maybe they don't like, they build from steel structures. Yeah, steel structures. Yeah, that's a little concrete. That they call non-concrete. Do you know the points? It's an office building and the opposite of a Chinese embassy near Tudupung market. Right? That the points they build from the steel structures. They build around 6-floor buildings. If you look from the outside, it seems like concrete, but if you go inside, you see it's a steel structures. So steel structures, many of them building from steel and glass. If it's mainly steel structures, we call non-concrete building because those buildings can last maybe around 10 to 15 years maximum. If you have a good maintenance, it can last for 15 years or some maybe 15 years. It depends on the quality of steel. 20 years. But if a concrete, maybe it can last for 70 or 80 years. Yeah, but from tax point of view, even your concrete, they only allow you to, they expect the useful life only 20 years, and if a non-concrete, 10 years, because the depreciation rate is 10%. Yeah. Okay, this is class one, tangible asset. You depreciate straight line 5%, which you can include building, structures, road, and ship. Class two, computer, electronic information systems, and data handling equipments. So the depreciation rate is 50% decline balance method. Yeah, decline balance method 50%. So you buy a computer, first year, you can depreciate 50% of it. So what is data handling equipments? Any kind of equipment that actually you use to store the data, can be server. Yeah. But now they don't use server, they use cloud. Yeah. So right. Maybe unless we are like a data centers, data center company, right? Like Google or Microsoft, Amazon, all of those companies. Cambodian company, we don't have this kind of business. We actually purchase the storage fee from those companies. Class three, automobile, trucks, office furnitures, and equipments. 25% decline millennium method. Yeah, class three. And class four, all other tangible property, which is not included in class one, class two, and class three. Yeah. So now you can see anything that is not class one, class two, and class three, then class four. The depreciation rate is 20% decline. Balance method. So this is the depreciation rule. So you cannot change that. You have to follow this. Yeah. Bên đây. USC Plus, yes. ហ្នឹងបាទ តែយើងអាច make useful life we're talking about useful life right you can use for more than 1 years ប៉ុន្តែបានច្រើនជាង1ឆ្នាំណាអូខេ accounting តែយើង include fixed asset អត់ហ្នឹងព្រោះ flash ឥឡូវលេខសុំមានមែនទេតែមានប្រើ hard disk hard disk អូខេខ្ញុំចង់និយាយហ្នឹងគេហៅ data handling equipment ដូចគ្នា hard disk និង flash គ្រាន់តែមួយបានច្រើនមួយបានតិចមិនអញ្ចឹងប៉ុន្តែ hard disk វាបើឥឡូវគេលែងចង់ប្រើតែ hard disk ហ្នឹងដូចមុនខ្ញុំទិញ hard disk ស្ដីណាអូខេ 5T 8 store កាលពីសម័យអត់មាន cloud ប៉ុន្តែឥឡូវគេមាន cloud តែអញ្ចឹងខ្ញុំលែងប្រើ hard disk ច្រើនឆ្នាំដែរណាព្រោះពេលខ្លះយើងទៅពេលមាន cloud យើងស្រួល access តែមាន internet យើងអាចaccess ទៅកាន់អីគេ document បានបើកាលមុនប្រើ server តយើងមក office ដើម្បីធ្វើការយើងមិនត្រូវយកទិន្នន័យមកធ្វើការធ្វើ report អីហ្នឹងអញ្ចឹងណាព្រោះគេ professional firm do not allow us to save in computers okay before what we need to do is we have to invest in hard disk អីនេះអស់ហ្នឹង flash ហ្នឹង flash វាងាយឆ្លងមេរោគ flash កាលពីសម័យធ្វើការដំបូងហ្នឹងហើយ20ជាងឆ្នាំមុនកុំព្យូទ័រចរគាត់ដោត flash ពុបលុតឈឹងហើយសម័យហ្នឹងកុំព្យូទ័រវារៀង slow ទៀត slow សម័យយើងទៅកើតអូខេ okay straight lines yeah I think I already explained we take depreciation deductions equal acquisition cost multiplied by 5% but acquisition cost include purchase price minus rebate plus improvement right that's all I would say we can say depreciation value we had it and then they say that from the starting years, which means the first year of depreciation, the depreciation allowance is equal to a yearly depreciation allowance as 1 full year. This is also different from accounting, which means if the asset put into use in a year, even though not equal to 12 months, you use only 1 week, 1 month, or maybe a few months, you can claim 1 full year depreciations. Let's say you buy a building equal to $1 million, and then you put into use in October 2025. Then your depreciation will be depreciation expense will be 1 million multiplied by 5%. Gonna be 50,000 for year 2025. How about accounting? Let's say from 1st October. How about accounting? Can you claim full year depreciations? Are you sure? Huh? Can you claim full year depreciations? Okay. I want to have an explanation why you say yes. Huh? I mean, accounting, yeah. No, why you say yes? Yeah, for tax, they said, okay, 1 full year depreciation for asset first. but we change, just say that it depends. Depend, what do you mean by depends? I'm talking about accounting depreciation, not tax. Tax is one full years. Accounting, no, right? They depreciate based on monthly basis, right? If you put the asset, the used asset from 1st October, the depreciation, and then will start from October, November, and December. So you can only claim depreciation for 3 months. Yeah. But for tax, you use only 3 months, but you claim depreciation full years. Good thing or bad thing? Good, maybe good. Yeah. You can claim more depreciations. It means you can claim more deductions. Let's say maybe accounting, you follow the same rate. For accounting, how much you can claim depreciation in year 2025 based on accounting? Accounting depreciation, expenses, if let's say 5%, yeah, you can take 5% per year, right? Let's say 5% per year. Then you take 1 million, multiply by 5%, and then you divide it by 12, and then multiply by 3 months, right? How much is it? Yeah, you take 1 full year divided by 12 and multiply by 3 months. Counting by là bay khai mà đấy. Vìยังปราบใบkhai by là bay khai. Bạn bạn. 10,500. Yeah, and now tax is full. Yeah. A lot of company now, they say, oh yes, they don't want to make an adjustment to the depreciations. They try to set the accounting method based on the tax depreciations. Even though you set the rate the same method, it still have a different here. Yeah, different. Because accounting, you claim depreciation only for the period you actually use. Yeah, but tax, don't care. Only if you only use 1 month, you can claim, also can claim full years. Yeah. Can what? Again? For accounting? Yeah. I mean, for accounting, yeah, they have the right to set, They decide to say, hey, I use this asset from 1st October 2025. Yeah, they can set. Tax also fine, no problem. You can set. They will ask you from the tax authority. They will ask you, okay, when you actually use this asset. Okay, you will use the information from accounting. Say this asset I use from 1st October 2025. But of course, accounting can only 3 years. But for tax, fine, you can claim full years. So that's why always create the difference between accounting depreciation and tax depreciation. But this different only temporary. Why? Temporary. Because at the end of the day, from accounting and tax, the asset will be fully depreciated. Yeah. It just tax claim more deduction in the first year, and then if you claim more deduction in the first year, and if it's rate the same, then the last year you're going to claim less. But accounting keep, the accounting will be higher. So that's only a timing difference. And that's why I said, this kind of timing difference from financial point of view and financial requirement now based on IFRS, you are required to calculate what we call the deferred tax asset or deferred tax liabilities. Yeah. Okay. You will next term, right? You study financial reporting. Yeah, IFRS. Okay, pay attention to that. Many of accountants now, I see they don't calculate this, and they don't know how to calculate. Why they don't know how to calculate? Because they don't know tax law and accounting. What is the difference? What is the temporary difference? What is the permanent difference? They see adjustment, add back, deduct, add back, but they cannot identify what is temporary, what is the permanence. The temporary is like this, which means tax can claim more deduction in the first year, or maybe accounting can claim more deduction in the first year, but tax, can claim less or more, but at the end of the day, we can claim full deduction based on the same rule. Maybe faster or later. That we call temporary difference. But any non-deductible expense, which tax law say, hey, you cannot deduct this year and next year or following year, you cannot deduct. If we call, then it is a permanent difference. Yeah. Okay. The same thing like we study about, we learn about charitable contribution. You cannot carry forward, but interest you can carry forward. But interest can carry forward is mean for 5 years. So during this 5 years, it's only create a different temporary difference. But for charitable contribution, any excess, the limits cannot be carried forward, which means the add back, the difference is become permanent, no longer allow for deduction in the future years. For the ending year, they said for the ending year of depreciation, the depreciation allowance is equal to 0 if the asset is disposed. They set a rule for when you dispose of asset. Let's say now you buy a building, okay, in 2025, $1 million, you keep depreciations, and then you decided to dispose in the year. Let's say you dispose. Twenty 30, you try to dispose, you sell your building. 5 years later, you sell your buildings. So from accounting, will you allow to claim depreciation in year 2030? When you dispose, yes, right? Yes, you are allowed to claim depreciation for 11 years, maybe 10 years. Let's say dispose on first, put a date from 1st of November. Then you allow to claim depreciation accounting for 10 years. For accounting, you allow to claim depreciation. Can depreciate, right? For 10 months. Yeah, from January until end of October, you're allowed to claim depreciation. But for tax, no. You cannot depreciate once the asset actually disposed in that year. So in year 30, for tax purpose, no depreciation. No depreciation allowed. Accounting, yeah, can be taxed. You can see that 10 months. Tax, you cannot depreciate. Not just building, but any kinds of asset, all kinds of asset. This is the condition of when you dispose. But when you use asset until its useful life, for straight line, let's say, building 20 years, you can see that the building is 1 million. If 5, let's say, now you have a building you buy 1 million. and you minus your depreciation allowance, right, for 20 years. Now you have how many years? If depreciation allowance gonna be 20 multiplied by 50,000. Yeah, so gonna be 0 anyway, right? But some cases you still have some value at the year 20s, right? Some value if you have some value. Then in that year you don't need to calculate depreciation 5% anymore. Whatever the book value you have, brought forward from year 19, you can claim full depreciations. Yeah, no need to calculate, because tax law say, hey, now up to year 20, you can claim full depreciations. Okay, let's say 19 here. If you, okay, 19, remaining gonna be 50K anyway. So yeah, you don't need to calculate, you just claim. Yeah, because here, but sometimes, why different? Because sometimes you can have improvements, up and down or whatever. Maybe the value is the value in year 20 is not equal to the 5% depreciation on the cost. Yeah, but it doesn't matter whether it's 50K, 100K, 200K remains at year 20s, or can be claimed as a deductible expense. But accounting, what accounting you're supposed to do? If the bidding can be used for maybe another 10 or 20 years, are you going to change the accounting rule? Of course, no, right? Of course, if you keep using, your NBV will be 0. Okay, your bill is 0. I think maybe we follow the same thing because we set the useful life only 20 years. All costs related to that asset, all the costs fully depreciate up to year 20s. So yeah, even though you can use that asset for many years to come, but your NBV gonna be 0. No depreciation expense should be claimed. Tax, they follow the same thing. Okay, that's some rule similar to accounting. So for decline balance method, depreciation deduction equal depreciated basis plus depreciation rate. So this is a formula I just explained to you before. You have to record undepreciated value, which is what we call book value. But this is we call, to be precise, tax book value. TBV. Yeah. At the beginning of the tax years plus addition. Addition is new purchase. And minus disposition in the year, which this is proceed. So what you can sell, what you can get, proceed from sale. So what you can get. But for accounting, that's different, right? You have to calculate what we call gain or loss. To do depreciation, you calculate gain or loss first, right? If it is gains, what happens? Accounting, because accounting, the proceed from sale they use to calculate only loss or gain, which you need to recognize in your P&L. If it's gain, you recognize as other income. If it's loss, you claim as more deduction. Yeah, depreciation you can also claim, up to the date that you actually use, right? Depreciations. And then if you decided to dispose that asset, then you took that NBV of that asset and then trying to to minus the proceed, the selling price that you can get from the disposed of asset. And then if it is gain, record as the income. If it is loss, claim as an expense. But from tax, they don't care. Okay, for declining balance method. But for straight line, you are allowed to calculate what we call tax gain and loss for straight line. For straight line. So for straight line, you are allowed to claim by taking proceed minus tax book value. But remember, if you dispose here, let's say based on this, for you say no depreciation, let's say up to year 30, 25, 26, 27, 28, 29, 30. So let's say you have a building, 1 million, and then you depreciate now only up allowed to 5 years, right? Year 30, you cannot claim depreciation because you dispose. Then 25, 26, 7, 8, 9. So 5 years only. So your depreciation here, your TVB, tax books value, at the beginning of year 30 will be 1 million minus 5 multiplied by 25,000. Sorry, 250,000. Then your NBV here will be 7, 5. If you are class 1, you are allowed to calculate tax gain per tax or gain per accounting. Let's say you dispose and then you get, how much is it? You can sell building with maybe 1.2 million. Yeah, maybe your building is, the property now increase. Then you can calculate the gain, right? And you calculate gain, tax gain. $1.2 million minus 7.5. Then you will get 450,000 gains. So that's gain for asset class 1. Asset class 1, you can calculate gain or loss. If it is gain, you need to pay tax. This is to pay subject to TOI. If you lost, you can claim a deduction. Same as accounting. Yeah, you claim as accounting. But the only difference from accounting, you cannot claim depreciation at the year that you actually dispose, on the year that you dispose of that asset. Accounting, you allow for 10 months, but for tax, 0. That is different. However, if asset that you depreciate based on a decline balance method, you can only calculate gain or loss when you dispose pool asset. But if you dispose 1 or 2, you are not allowed to claim, to calculate tax gain or tax loss. So what you're supposed to do, okay, whatever you get from selling of this asset or dispose of asset, just use that number to deduct from tax depreciation value only. But if you dispose a pool, which means class 2, all computer data handling and all of those equipment, you dispose all of them. If dispose all of it in the pool, then you are allowed to calculate capital gain on the dispose of that asset. But just 1 or 2, maybe some of it, you are not allowed. Then what happens when you dispose? Based on accounting, it's a must, right, to calculate gain or loss. Then if the asset in class 2, 3, and 4, if you dispose and then you have a gain, that gain is not taxable. And if it's loss is not deductible. Okay. So you take like TVB, plus additions minus proceed from sale, you will get depreciated value. Okay, and then depreciation charge, depreciation expense, equal to depreciation value multiplied by depreciation rate. You are required to calculate this during final exam or maybe mock exam. Not maybe, it's mock exam. It's compulsory. This question is compulsory. Before, if you, before, how long is it? Maybe around 10 years ago, it's compulsory. If you cannot get fit, this question will get 20. If you cannot get 10s out of 20s, you fail before compulsory. Yeah. If you cannot get 10 out of 20s, you have failed. Even though other, maybe other questions you can get and add up all the answer you have, you actually have more than 50 points. But if this QI's question you fail, it means you fail. And the pass rate is very low. And then they say change. Okay, we they convince to the ACCA, say, hey, no, don't do this. If you do this, it's gonna be a big problem. Nobody can pass because TOI question, a lot of people cannot do it properly because sometimes you don't pay attention and you don't practice. If you want to pass the TOI, you need to practice. Do a calculation, try to answer 3 or 4 or 5, maybe a question, then you will be familiar with the step. When you're supposed to start and when you're supposed to end. Yeah. And also before, if you cannot get, the answer correct, the point will you also not pass because they take into account mainly on the final result. And that's also the problem. But now they change the marking scheme, provide a point not based on the final result. Even though you get the number wrong, but you will get a point based on what you answer is correct based on, the adjustment that you made, Yeah. Okay. No worry. We'll do that together next week. And okay, that's the last point what we're trying to say. Depreciation must be made actually by the enterprise. As a rule, enterprise cannot do for tax purpose any adjustment to the value of assets. Okay, cannot adjust, cannot change the price. Each period, enterprise must record all necessary depreciation for that period, even if there is no sufficient profit or no profit. Yeah, depreciation you must do. You cannot change mind. Hey, this year I make a huge loss. I don't want to depreciate. Based on accounting, can you do that? No, right? But I have one company, is my client. They lost for like 10 years. They lost for 10 years. And the main expense is depreciation because they build a resort. Yeah, the resort. And they invest a lot of, because of luxury resort. It's, in luxury resort at the island near Koh Rong, one of the famous resort in Cambodia. You can compare to Bali or maybe Maldives. So, yeah, up to year 7, they're keeping loss, and loss is a huge because of depreciation. And then they change depreciation policies to extend more useful life of that asset. Okay. The auditor is PwC at the times, and I, as a tax advisor. So, okay, all the management team, they change the depreciation policies, they go through the board, okay? They change to extend more useful life because of one asset. Asset is the, previously they expect like 7 year or 10 years, 10 years useful life. And then they said, oh, this asset can be depreciated, not 7 years, but now should be at least 15 years. And then the depreciation will be less, will be lower. So what they do is that they convince the board will accept, right? Because the board don't want to see the bottom line is so have like a big negative numbers. But they hire a expert from Germans, because German is very well known in terms of, engineer or whatever, and they come with a very nice report. One of the best, engineers come to say, hey, this can be used up to 17 years. Okay, but they say, okay, do some adjustments, so only 15 years. Then PwC fighting, say, no, you cannot change depreciation policy. Okay, the board already signed the policy, we revise everything, we get a report, expert answer, and then the PwC still refused to accept. We've been fighting for 6 months. Okay, and then the client came to me, say, hey, Laisim, can we help? Actually came to my boss, because my boss, previously, she used to work at PwC, and say, hey, can you have to explain, because we have everything, the board change, and then I sent one email to auditor at PwC, hey, if you don't believe the expert, what you can do as an auditor, you can ask the company to hire an expert, or you can hire expert, any expert, but you can claim from the company to do a valuation. That is how the external auditor is supposed to do on something that is not your skill. It's not based on your skill, because auditor don't know about engineer. And then it took like a week, and then they come back. Okay, fine, no problem. I don't do adjustment, because they want to do adjustment by, claim more depreciation expense. And if they claim more depreciation expense, the company will have a huge loss again. And the operation, the CEO, CFO have to explain to the board. The board have to explain to the shareholders. Okay, yeah, I have seen once we can change, but in order to change, you need to be prepared. And we successfully convince the external auditor to accept, the change. From tax, we don't care, because as you can see, we have class 1, 2, 3, 4. Anything not into 1, 2, 3, all 4. Okay, we're done for today's. Yeah, almost finished. I talked too much. We're supposed to be finished. Okay, anyway, see you again Monday.